Today we're going through over 10 ETFs for long-term investors. But what is an ETF? When you go to the shops, you can buy individual chocolates, just like you can buy individual stocks like Tesla and Apple on the stock market. Or you can buy a box of many different chocolates, which is just like an ETF. So let's say, for example, you buy an ETF that tracks the S&P 500, which is the top 500 companies in the US. When you buy this ETF, you're actually buying lots of little pieces of the world's biggest companies, like Tesla, Apple, Microsoft, Nvidia, and more, instead of having to buy them all individually, which can be quite expensive. ETFs are generally seen as less risky than picking individual stocks, because even if one company performs poorly, there are a lot more companies in that ETF that could have performed better. But it is really important to keep in mind that this video is general in nature and doesn't take into account your personal situation. You should always do your own research before you invest in anything and seek advice if you're unsure. You can read my full financial services guide in my description. Diversified ETFs. So the first ETF is VDHG, which is the Vanguard Diversified High Growth ETF. This ETF is an all-in-one diversified ETF that invests in 90% growth assets and 10% income-producing assets. The management fees are 0.27%, and the suggested investing timeframe for this ETF is 7 years or more. This ETF is essentially a combination of different ETFs in one investment, which makes it very diversified. There are 7 underlying ETFs that make up VDHG, which you can check out here. And if you invested $10,000 5 years ago, you would have $14,552 today. The next ETF is DZZF, which is the Betashares Ethical Diversified High Growth ETF. This ETF is similar to VDHG, but it's an ethical version. It invests in 90% growth assets and 10% defensive assets. The underlying assets that make up this ETF are international equities, Australian equities, international bonds, and Australian bonds. The performance over the past year is 12.85%. We don't have a 10-year average because this fund was created in 2020. The management fee for this ETF is 0.39%. And if you'd like to start investing, you can check out my free investing cheat sheet, which you can download in my description below. Australian ETFs. The next ETF is VAS, which is the Vanguard Australian Shares ETF. This ETF is one of the most popular ETFs in Australia. This ETF gives you exposure to the top 300 companies listed on the Australian stock market. This ETF has a management fee of 0.07%. It suits investors with a time frame of over 7 years or more. The top holdings in this ETF are BHP, Commonwealth Bank, CSL, NAB, and Westpac. If you invested $10,000 into this ETF 5 years ago, you would have $14,321 today. And if you'd like to learn more, you can check out the link below. The next ETF is VETH, which is the Vanguard Ethically Conscious Australian Shares ETF. It's basically like VAS, but with a more ethical focus. The management fees are 0.16%, and they also have indirect costs of 0.01%. This ETF has more of an ethical focus, and it excludes companies with more involvement in fossil fuels, nuclear power, alcohol, tobacco, and more. This ETF has 253 companies in there, and the top holdings for this ETF are Commonwealth Bank, CSL, NAB, Westpac, and ANZ. If you invested $10,000 1 year ago, you would have $10,820 today, since we don't have over 10 years of data for this ETF. And if you'd like somewhere to buy ETFs, you can check out Pearler and use my code Queenie for a $20 credit. The next ETF is A200, which is the Betashares Australia 200 ETF. This ETF is basically similar to VAS, but it excludes some of those smaller cap companies. The management fees for this ETF are 0.04%. There are 200 companies that make up this ETF, and the top holdings for this ETF are BHP, Commonwealth Bank, CSL, NAB, Westpac, ANZ, and more. And the average performance for this ETF over the past 3 years is 12.28% per year. And the next ETF is FAIR, which is the Betashares Australian Sustainability Leaders ETF. This ETF doesn't invest in any of the big 4 banks or any of the Australian mining companies. The management fees for this ETF are 0.49%, and the top holdings that make up this ETF are Brambles, Telstra, Suncorp, Goodman Group, Xero, Sonic, and more. There are currently 83 different companies that make up this ETF. Over the past 5 years, this ETF has had an average annual return of 6.42% per year. Before we go to the next ETF, I have a small favor to ask from you. If you're enjoying this video, video so far and the information that I've put into this video, it would mean the world to me if you could subscribe to this YouTube channel. It helps this channel more than you can imagine. Global ETFs. So the next ETF is IOO, which is the iShares Global 100 ETF. With this ETF, you can invest in 100 of the biggest global companies. The top holdings for this ETF are Apple, Microsoft, Amazon, Nvidia, and Alphabet. And the average return over the past 10 years is 11% per year. The management fee for this ETF is 0.4% plus other expenses of 0.01%. If you invested $10,000 into this ETF 5 years ago, you would have $17,349 today. The next ETF is ETHI, which is the Betashares Global Sustainability Leaders ETF. This ETF invests in large global companies that are identified as climate leaders. The management fee for this ETF is 0.59%. There are 201 companies that make up this ETF, and the top holdings are Nvidia, Apple, Visa, Home Depot, MasterCard, Toyota, and more. This ETF has an average annual return of 16.65% per year over the past 5 years. So the next ETF is VGS, which is the Vanguard International Shares ETF. This ETF has a management fee of 0.18%. This ETF invests in the top 1,500 companies in the world from developed countries, excluding Australia. The top companies that make up this ETF are Apple, Microsoft, Amazon, Nvidia, and Tesla. If you invested $10,000 5 years ago into VGS, you would have $17,197 today. So the next ETF is VESG, which is the Vanguard Ethically Conscious International Shares ETF. This ETF has a management fee of 0.18%, and it suits investors with an investing time frame of at least 7 years. This ETF invests in 1,600 companies worldwide, and these companies have been ethically screened. The top companies that make up this ETF are Apple, Microsoft, Amazon, Nvidia, and Tesla. If you invested $10,000 into this ETF 3 years ago, you would have $14,288 today. And now on to US ETFs. So the first US ETF is VTS, which is the Vanguard US Total Stock Market ETF. The management fees are 0.03%. This ETF suits an investor with a time frame of at least 7 years. This ETF invests in 4,000 companies listed on the US stock market. The top holdings for this ETF are Apple, Microsoft, Amazon, Nvidia, and Tesla. If you invested $10,000 into VTS 5 years ago, you would have $18,888 today. The next ETF is IVV, which is the iShares Core S&P 500 ETF. This ETF invests in the top 500 companies in the US. The management fees for this ETF is 0.03%, and the top holdings that make up this ETF are Apple, Microsoft, Amazon, Nvidia, and Google. If you invested $10,000 into this ETF 5 years ago, you would have $17,101 today. And the final ETF is NDQ, which is the Betashares Nasdaq 100 ETF. This ETF invests in the top 100 companies on the Nasdaq. The management fees for this ETF are 0.48%, and the top holdings for this ETF are Apple, Microsoft, Amazon, Nvidia, and Meta. The performance for this ETF over the past 5 years is 19.52% per year. Write me a comment below with the word secret in it, just so we know you watched this video all the way through. We really appreciate you. Thank you. Bye.